Hello and welcome. Thank you for joining us today for the launch of the International Energy Agency's new Oil 2025 report, the latest edition of our annual publication that provides a medium-term outlook for key oil market trends for the next 5 years. I'm Jethro Mullen, head of the IEA's communications team. I'm joined today by IEA Executive Director, Dr. Fatih Birol, and by the head of our Oil Markets and Industry Division, Toril Bosoni, whose team produced the new report. And this new report is freely available to read and download on the IEA website. So during today's event, Dr. Birol will make some opening remarks, and then Toril will present the key findings of the report. We'll then take questions from journalists. For the journalists taking part in this press webinar, we invite you to send your questions via the Q&A function in the Zoom. You can do this at any point during the presentation, and we'll also take a 2-minute break right after the presentation for you to enter your questions. With that, I'll hand over to our Executive Director, Dr. Birol.
Many thanks, Jethro. Greetings to everybody from International Energy Agency headquarters. As my colleague, Mr. Mullen, mentioned to you, we are going to share with you our thoughts, our expectations about the oil market developments between now and 2030, in addition to our work we do every month on our monthly oil market report. Once a year, we look at the next few years, how we expect the oil markets to evolve. So before going to a bit our long-term expectations on the demand, supply, and the markets in general, I want to say a few words about the current situation in Middle East. So the situation is still unfolding, and there are many uncertainties how and if it is going to have structural impacts on the oil and energy markets. Still unclear, so we do not want to make any statement in that context. But a few things are clear. First of all, Iran, a major oil producer. The numbers about Iran are important to underline. According to our oil market report, currently Iran produces about 4.8 million barrels per day of crude, condensate, and NGL, 4.8. And the exports are around 1.8 MBD of crude oil, and 800 KBD of products. For now, when we look at the markets, we do not see a major supply disruption. And our expectations for this year that I think thoroughly we published also the day before yesterday, our numbers show that our expectations for demand growth is much less than the supply growth. We expect demand this year to grow about 700,000 barrels per day, whereas the supply growth we expect is more than double, about 1.8 million barrels per day. This is, of course, in such a difficult market context, this is a bit of a relief. But as I said, and we will repeat it throughout this, this session, there are many uncertainties. There are many uncertainties whether or not another party will be involved in this the conflict in Middle East or not, whether or not always the question, the Strait of Hormuz, which is very important, is going to be closed for some time or a longer time. These are all questions on the table because, as we all know, Strait of Hormuz is extremely important for the global oil and LNG trade. We are going to follow these things very closely, and we are following very closely on a momentary basis. And we are, again, we want to underline that markets are today well supplied, but if anything happens, if there are some serious issues in the oil supply disruptions come to the table, IEA is always ready to act again, if only if it is necessary. Now, this is our view about the current situation in the oil markets. But if you look at a bit more from a wider perspective, about the next years to come, how do we see it? My colleagues, Toril Bosoni and her team, made an excellent work how we see in the next few years, between now and 2030, how the oil markets from the demand side, supply, refining, trade, how it developed. And I wanted to thank them wholeheartedly for their great work. Dear colleagues, when we look at the energy markets, oil markets, I see a double act. What do I mean with this double act? In the last, especially in the last 10, 15 years, there is almost simultaneously two major growth on the demand side and on the supply side, driven by China and United States. When we look at the supply side, global oil production in the last 10 years or so, more than 90% of the growth came from the United States. And on the demand side, more than 60% of the global oil demand growth came from China. This came almost parallel and simultaneously. And now, when we look at the picture, we see that on the supply side, U.S. Oil production growth is slowing down for geological, for economic reasons. And the Chinese oil demand growth is slowing down as well, again for economic reasons and also the developments on the transportation sector. So this double act in the last 10 years or so is slowly but surely coming to an end, as we see, as the numbers show us. Now, and the next years, when again, if we look at the supply will grow significantly, which is good news for comforting the markets, I think in these difficult days especially. And according to my colleagues' numbers, we expect between now and 2030 about 5 million barrels per day of additional production capacity will be there. And the big chunk of it is coming from the, as we call it, the American Quintet, namely US, Brazil, Canada, Guyana, and Argentina. These 5 countries will bring a lot of oil to the markets, and this is significantly higher than what we expect on the growth on the demand side. So when we look at the demand side, we are more or less there, in fact, exactly there, I should say. What we said last year, we expect global oil demand growth stops to grow around 2030 before the end of this decade, mainly as a result of the developments in China and beyond. We expect the global oil demand will grow about 2.5 million barrels per day between now and 2030, which is basically half of the growth we expect from the supply, from oil supply growth, which is good for comforting the markets. So why do we expect global oil demand growth to slow down and reach a peak around 2030? There are basically 3 reasons we see. One is the economic growth, especially in China, which was the engine of the global oil demand growth, slowing down and changing its nature, becoming a lighter economy. This is number one. Second, the electric vehicle, I should say, the expansion is growing in China, in Europe, but in other parts of the world. This is the second one. And third, the oil used in power generation in Middle East is slowing down. In fact, it is being substituted more and more by natural gas and renewables, which I believe is a wise thing to do from an economic point of view at least. And these are the reasons we expect that the global oil demand growth will see a plateau around 2030. When I say the electricity in Middle East, I should mention to you that we are about to release a report very soon, I guess, Jetro, in the next few weeks, a report on the Middle East electricity outlook, because electricity demand growth in Middle East is much stronger than many other reasons. So looking at this picture, we think that in the next 5 years, in terms of demand, the single most important driver in terms of sectors of, in terms of global oil demand will be petrochemicals. Petchem will be the major driver of growth. So, dear colleagues, before passing the word to my colleague, Mrs. Bosoni, I just wanted to tell you that we see at the IEA in this year and the next few years to come, rather comfortable oil markets, bearing big disruptions on the geopolitics and the economic and others, just to get the market fundamentals. So I believe this is a good news, at least from a stability point of view. But there is still no room for complacency. This is an area that we wanted to underline. There are so many uncertainties in geopolitics. There are so many surprises in geopolitics, in economics and trade, and the policy directions in some of the producers or consumer countries are taking or changing. So at the IEA, we believe that the energy security is a key issue for today and for tomorrow. Energy security for the traditional energy security risks, such as oil and gas, but the emerging energy security risks, such as electricity, critical minerals, and supply chains. So looking at all of this together, we believe energy security is still a major issue, and every day when we wake up, when we look at the news, we understand the critical importance of energy security, and IEA is going to fulfill its mandates to look after this very important aspect of our economic life. With this, I would now like to turn to my colleague, Mrs. Bosoni.
Thank you, Dr. Birol, and good morning, ladies and gentlemen. I'm very happy to be here to present the findings of our medium-term report. But first, as Dr. Birol was saying in his introductions, we are seeing a quite comfortably supplied market at the moment. Oil demand growth is slowing to about 700,000 barrels a day this year and next, and we're seeing quite robust growth in global oil supplies. In May, the latest month that we are assessing, we saw oil demand growth up by 1.9 million barrels a day from a year ago. That's led by the Americas, but also as OPEC plus countries are starting to unwind some of their voluntary production cuts. So for 2025 as a whole, we're expecting oil supply to continue to grow strongly, about 1.8 million barrels a day, so more than double the expected demand growth. Non-OPEC plus countries dominate this, adding about 1.4 million barrels, and we're seeing growth moderate somewhat in supply in 2026, but still outpacing what our expectations for oil demand growth. Now, moving over to the medium term, and here on this chart, you can see that we're expecting oil supply capacity or oil supply to outpace demand also in the medium term. and we see that here. And you can see from this chart on how the drivers of that growth is changing. As we heard, the United States has dominated supply growth over the past decade, and China the demand growth, and especially in the post-pandemic period when those two countries grew by more than the total amount. Not to say that other countries are not growing, but in the net basis, they were driving the increase. And looking into the next year, from 25 until 2030, we can see that the United States is still providing some growth to supply. It is a big source of supply growth, but the pace of growth is much slower than what we have seen for the past decade. And it's largely driven by gas liquids as activity in the shale patch is slowing down and getting more into the gas side. And for demand, you can see here that Chinese demand is expected. It will grow for the next few years or so, but then it will start declining towards the end of the decade and end up in 2030, roughly where it is now in 2024. Moving on to look at demand more in detail, you can see here that oil demand continues to grow towards the end of the decade, but the growth is slowing significantly. Already in 24 and 25, as we were expecting, you see oil demand growth at around 800,000 barrels a day, compared to much higher levels post-pandemic and the previous decade. And we see that this growth continues to slow towards 2030, and in the final year we're expecting a small decline, and when plateau is reached. The lion's growth of the share of the growth is coming from petrochemicals, and we're also seeing biofuels eating into demand growth. I'll get back into that in a second. Here you can see that the divergence between the feedstock use and fuel clearly illustrated. We're seeing LPG and ethane and naphtha growing strongly, and the biggest declines coming from gasoline demand, where really the EV penetration is having a biggest impact, and we're also seeing declines in other products and fuel oil due to the switch out of oil burn for power generation that Dr. Birol was mentioning in his remarks. In terms of countries, OECD countries, we're expecting demand to slow over the period. We have some changes, as we heard. The emerging Asian countries are expected to continue to grow. India is by far the largest source of growth, adding about 1 million barrels per day. Other Asian economies in Southeast Asia, led by Indonesia, also see strong growth, where you see a demand in China and the Middle East plateau and declines in the advanced economy here on the left. Now, moving on to supply, as we heard, we're expecting oil supply capacity to increase by about 5 million barrels a day to 2030. And this is dominated by gains in natural gas liquids, which is obviously having implications for the refining sector, but it also well matched with that demand growth that is coming from the petrochemical sector, which mostly non-refined fuels. And you can see here that non-OPEC producers, they're adding about 2/3 of the global increase, 3 million barrels a day, led by the Americas that we heard. But we're also expecting strong growth from Saudi Arabia. That's gas liquids that comes along with the development of gas resources there. And we're seeing biofuels increasing about 700,000 barrels a day from now to 2030. By contrast, very marginal increases in crude and refined feedstocks, strong growth in the next few years, but then we go into decline towards the end of the decade unless new projects will be sanctioned. We do estimate that projects that are well advanced but where there's no final investment decision haven't been taken could add about another 1 million barrels a day by the end of the forecast periods if those projects are sanctioned. So just before closing up, I want to talk about the refining sector. Of course, these demand trends and supply trends will have major implications for the global refining industry. And of course, the industry will be increasingly challenged by demand growth that is dominated by petrochemical feedstock demand rather than transport fuels as it has in the past. And this petrochemical feedstock demand is met by products that bypass the refining industry altogether. And despite this rather tepid demand growth picture, we do see about 4 million barrels a day of new capacity coming online from now to 2030, and offset by some declines, some shutdowns of 1.8 million barrels a day, but a net increase nevertheless, which suggests that the higher cost plants in regions we see demand growth slowing, such as Europe, but also parts of Asia, and in US West Coast may face increased pressure of shutdowns in the coming years. So with that, I will end my presentation today. I will hand it back to Jethro.
Thank you very much, Toril, for the presentation, and Dr. Birol for the opening remarks. We now have time to take some questions from journalists. So we invite the journalists in attendance to send your questions through the Q&A function of the Zoom if you haven't done so already. And please mention your media outlet along with your question. We'll take a 2-minute break to give you a chance to enter your questions, and we'll be right back. Thank you. Hi, welcome back. Thank you very much for the questions. We're going to try and get through as many of them as we can in the time that we have. So one question is about the trends in two of the big markets. You have significantly revised down the forecast for Chinese oil demand and revised up the forecast for US oil demand. What are the main reasons for this? And then also a question on will the oil industry continue to invest in new supplies when faced with chronic oversupply for the rest of the decade? So perhaps Toril, you could take those two. Sorry, the journalists didn't include their name for that. But we've asked them for their name, but please, Toril, if you could take those first ones.
Thank you, Jethro, and thank you for that question. It's true that we left oil demand growth, oil demand to 2030 is relatively unchanged from what we saw a year ago, about plateauing at around 105 million barrels a day towards the end of the decade, but big changes within those on the country level. Previously, we were expecting Chinese oil demand to continue to grow through the decade. And now in 2030, we're seeing oil demand unchanged from 2024. So continue to grow to 2027 and then declining over the previous years. On the latest years. There's a few factors that underpin those changes. First and foremost, we're seeing a significant slowdown in the Chinese economy currently, and we revised down the starting point for the projections. Slowdown in construction sector has been significant, and the sales of EVs has been extraordinary, and the impact of the EVs on the road has been higher than what we expected. More than 1 in 2 cars in China today is an EV, and the way that it's translating into use to gasoline demand is having a major impact. We're also seeing stronger than expected impacts from LNG use in trucking and high-speed rail. So these are the factors. Just on the drivers within Chinese oil demand growth, we're expecting to see continued growth in the petrochemical sector, which adds about 1 million barrels a day of feedstock use in China from now to 2030. And we're seeing similar decline in the transport fuels. Now, moving on to the United States, we were previously expecting U.S. oil demand to decline sharply over the period. Now, we're still expecting U.S. oil demand to decline by about 400,000 barrels a day from 2024 to 2030, but that's significantly less than we were expecting a year ago. And this is in large part due to a slower uptake of EVs in the car fleet and quite a more stronger growth and a more resilient economic starting point. So oil demand was stronger in 2024. Again, starting point has shifted marginally. So with that...
There was also the question, actually the question was from Grant Smith of Bloomberg, we've clarified that, asking about what oversupply means for investment. Will the oil industry continue to invest in new supplies when faced with chronic oversupply for the rest of the decade? I don't know if you wanted to add anything on that, or Dr. Birol.
I can only maybe say here that we just released our World Energy Investment Report, and we have seen that for the first time since many years, this year we expect the global oil investment to decline about 6%, driven by the supply-demand trends, and there is a bit of a reluctance there from the oil industry, and this affecting mainly the shale oil in the United States. But I wanted to also explain something here. In the oil industry, or in general, people look at the demand, how much the demand grows, and the investment, oil investment is a response to meet that demand growth. This is not right, or this is not right in 100% right, I should say, because when we look at the investment, which is about $400 billion this year, 90% of those investments go to offset the decline in the existing fields. So decline rates of the existing fields play much more of an important role than the demand growth. And I believe in the next years to come, when the decline rates become steeper, when the demand growth becomes much softer, as Tori just showed us, this will be more of a critical issue for the oil industry. It is the reason that the International Energy Agency is now undertaking a major study working with many companies, oil and gas companies, the oil field service companies, and the experts together about the decline rates around the world and how they will play a role in the future energy investment, which is coming in, I guess, in September this year. Thank you.
Thank you, Dr. Birol, and thank you, Grant, for the question. A very topical question from Nathalie Alonso of Agence France Presse. She asks, are you concerned about oil supply risks in the context of the conflict in Iran and Israel? Should we expect a sharp rise in oil prices? Perhaps that's one that you, Dr. Birol, can address.
Yeah, this is, of course, so many uncertainties. We have seen a significant increase in the prices, but again, these are not driven by the fundamentals. We have a lot of supply oil in the market. Demand is much weaker than the supply, and this is the security reasons, security concerns pushing the prices up. In a world where we don't see major big disruptions, we don't expect high oil prices to be with us for a very long time. Perhaps I should also mention that we are clearly monitoring the situation from different aspects, from the market and other aspects, and we are ready to act when and if there is a supply disruption, as we have done in the last few years.
Thank you, Dr. Birol. We also have a question about Brazil from Joe Lowe of Climate Home News, asking, given oil supply is going to outstrip demand, do you think, I guess that's global oil supply, do you think that the oil projects in Brazil that are being auctioned off today will be profitable? Obviously, in your presentation, Tori, you talked about the quintet, the Americas quintet, including Brazil. So how do you see things in Brazil?
Of course, Brazil is it has been one of the main sources of supply growth for several years now, and we expect it to continue to grow in the medium term as a number of new projects, FPSOs are coming online, they're being delivered. year after year, but we have seen that a few other projects have been delayed, pushed beyond the forecast period that we consider here. So we're seeing oil supply increase to reach about 4.1 million barrels a day in 2028, and then we see declines over the past 2 years of this forecast period unless other projects are coming on. And this just shows again the importance of decline rates and continued investment needs in existing resources, because in the offshore, deep offshores, as for US shale, you need to continue to add to maintain supply, not just to increase. But of course, the projects that are being sanctioned in Brazil today, they are being sanctioned at oil prices that I think will still be profitable at current prices. But if it's of course something that we're looking at, how where the sources of growth will come from in the medium term. As for now, we're seeing quite unsustainable stock builds evolving.
So we have a couple of questions about the Middle East and Gulf countries. One from Stanley Reed of the New York Times. Will the ambitions of Gulf countries in AI data centers potentially lead them to burn more oil for electricity generation than expected? And then somewhat connected to this, a question from Javier Blas from Bloomberg Opinion. He notes that the most important driver of global oil demand plateauing is a sharp drop in Saudi Arabia towards the end of the decade. Considering the policy interests of Riyadh about the large oil market, do you see a risk that Saudi Arabia could choose to keep the use of oil in its electricity system for longer than the IEA is currently forecasting? So perhaps those two questions, Dr. Birol, you could...
So, dear colleagues, as I mentioned, we are going to release very soon a report, the Middle East and electricity, because when we talk about, the world talks about Middle East, it is mainly oil and gas. But electricity demand growth in Middle East is skyrocketing for 3 reasons we see in this report coming. One of them is the air conditioner. More and more electricity will be needed for air conditioner. The second one is for the desalination of water. And the third one is the AI, as both of the colleagues mentioned. Especially AI, the questions come from that angle. AI, there is a race among the countries in the world to reshape the balance of power in the world in terms of usage of AI in industry, economy, defense, and other parts of our economies, our energy systems. And here, for me, when we look at the different countries, I believe the countries who have readily available electricity systems, they will be a step ahead of the others in terms of getting the technology companies, making progress in terms of AI for the countries, for the economies. And I believe the Middle East is one of those regions, especially some countries in the Middle East, if they are able to transform their gas or oil to electricity, because AI doesn't need energy. AI needs electricity. You have to transform it to electricity. I think it could provide an advantageous position for those countries in the race of getting technology companies, AI companies to their regions. And as I said, more to come in our September report. AI is a key driver of electricity demand growth, set to become a key driver of electricity demand growth in the Middle East, in addition to air conditioners and also the desalination of water.
Thank you, Dr. Birol. Perhaps we can squeeze in one last question before the end. This one more from Grant Smith, since we have a little bit of time. He says, it sounds like you're saying that OPEC Plus will need to reverse the current increases and probably cut production again. Is that the case, Toril? Any views on that? Obviously, we don't comment explicitly on OPEC policy. So, what's your view?
It's not for us to. We don't second guess what the OPEC plus producer alliance will do, but what our balances show, with oil demand growth slowing sharply over the period, and supply projects that have been sanctioned, that are underway to be delivered to 2030, we do see an imbalance and quite untenable stock builds developing. How the market would balance through prices, if we would see prices fall to levels that challenge the economics of production in other countries, such as the United States or other higher cost areas, that remains to be seen. But it's obviously something that we're looking and evaluating over this forecast period.
Thank you very much, Toril, and thank you, Dr. Birol. That is in fact all we have time for. We've covered as many questions as we can in the time we have. If any journalists have further questions, we do invite you to reach out to our press office and we'll get back to you as soon as we can. So it just remains me to thank Dr. Birol, Toril, to thank the journalists for your questions, and thank you to everyone following this event online for your interest in our work. And a reminder that the full Oil 2025 report is freely available to read and download on our website. So do please take a look. Thank you and goodbye.